All right, good morning, everyone. I'm taking this time to prepare for the answers to this mock paper. And if you notice in this mock paper, before every question, there are summarized notes that have been given to you, pertaining each task. So I would really encourage you to, before you look at each task of this mock paper, to read through the task briefing that you've been given. Very, very important. Yeah, they are very, very good summarized notes. So I would encourage you to really look at it. Okay. All right. So let's look at this question number one. Question number one. The question says, Eliano works in the accounts department of a textile company and has been given some reports in relation to the business. The question number one says, identify which type of report Eliano is looking at. So whether it's financial information or management information. Report one deals with historical information. Historical information, we said historical information has to do with financial accounting. Management information mostly deals with the present and the future. Yeah. Now, secondly, report 2 deals with forecast for internal users. Forecast is about the future, and management accounting deals with internal users. Financial accounting deals with external users. So report number 2 is dealing with management accounting. Okay. Then the question continues to say, within report 2, Eliano looked closer at the breakdown of the cost for making one product. Now classify the behavior of this cost. So classify the behavior of this cost, whether it's fixed, variable, or semi-variable. The first one says salary of the managing director's personal assistant. Salary is a fixed cost. Remember, a fixed cost is a cost that remains constant regardless of the level of production. You'll see most of this definition, they define mostly based on the total cost. So the total fixed cost is a cost that remains the same regardless of the change in the level of production. Whereas variable cost is a cost that changes when you change the level of production, when you change the level of output, when you change the number of units or the amount of service that you're providing. Okay, that is what a variable cost is. A semi-variable cost is a cost that has both the element of the fixed and the variable cost. Now, if you look at the second one, it says wages of the production staff paid on a piecework basis. Piecework means the payment depends on the level of production. So the wages here are determined by the level of production, which means this one is variable. The more the level of production, the more the wages. The less the level of production, the less the wages. The next one is the cost of fabric used in production. The cost of the material used in production. This is also variable. The more the production, the more the amount of material and the more the cost. Then we have the lease of factory sewing machines. The lease here is like the rent, the lease that you pay periodically. So this one is fixed. Then the next one says maintenance contract of a factory sewing machine charged as a set fee plus 100 hours of use. A set fee, that is the fixed. 100 hours of use, that is the variable. So this one has both the fixed element and the variable element. So this is a semi-variable cost. Then lastly, wages of sales staff made up of the basic salary and a commission. The basic salary is fixed and the commission is variable. So this one is also a semi-variable cost. Okay. Good.